Hi, I'm Kristen King from the Investing Channel, and you're watching Smart Money, the show that gives you the inside edge on the bets that the movers and shakers on Wall Street are placing. This week, we're looking at a sector that is helping to drive dramatic change in our lives, and a company that has probably been the most commented on of all time, generating column inches that, if laid end to end, would stretch well beyond the range of even its most prestigious vehicle. The sector is electric vehicles, and the company is, of course, Tesla. Tesla recently reported Q1 2021 earnings, and they made a profit, selling 185,000 vehicles during the quarter, twice as many as in the comparable period in 2020. Revenue rose to $10.39 billion, generating a net income of $438 million and earnings of 93 cents per share. However, this is Tesla, and so nothing is ever quite as straightforward as it seems, and a considerable chunk of that net income and earnings was realized through the sale of around 10% of the company's recent investment in Bitcoin, rather than through its day-to-day activities. Even more money came from the sale of so-called regulatory credits that Tesla receives from various government agencies that are looking to reduce or offset carbon emissions. In fact, Tesla made just over $400 million from the sale of those credits. The sale of these environmental tokens could become an increasingly profitable part of the company's business as carbon credits rise in value. In the EU, for example, carbon credit futures have doubled in price over the last year from 20 to 40 euros per ton and could rise even further. If we strip out these non-core activities from Tesla's earnings, however, we find that the far bigger battery and vehicle manufacturing divisions are still loss-making. Bankers J.P. Morgan highlighted that an increasingly competitive EV landscape is emerging as VW, GM, and others begin to switch their production away from combustion engines and over to EVs. That might not worry the cult of die-hard Tesla fans and investors who view the stock with almost religious fervor. It may not overly concern Elon Musk, Tesla's CEO, who is in line for a stock-related compensation package that could total as much as $11 billion. However, over the last 3 months, the stock has actually fallen by 12.4% and is down by another 3.5% since the Q1 earnings were released. That's a small change when compared to the triple-digit gains that Tesla has enjoyed over the past 2 years. However, it could be a sign that investors are starting to judge the business on its merits rather than on the publicity that surrounds it. With that in mind, it's interesting to look at the recent insider trading in Tesla stock and, in particular, what those in the C-suite are doing. Chair of the company, Australian businesswoman Robin Denholm, has been active in the last week, exercising options over 62,500 shares and then selling that same amount of Tesla, banking profits of more than $40 million in the process. Robin Denholm was quick off the mark, exercising her options and selling stock immediately after the Q1 numbers were published. In doing so, she achieved a sale price of a fraction over $740, which compares favorably with a current price of $683. Being an astute trader is not a crime, of course. Robin Denholm has been chair of Tesla since 2018, and in that time, she has got to know the business, its personalities, and idiosyncrasies very well indeed. The most recent transaction is the 5th time that she has sold stock in Tesla since July 2020. And if such a well-placed insider is regularly taking profits or cashing in their chips, if you prefer, then that may well be a signal for the wider market. Tesla is high on the agenda of Wall Street pros at the moment. Trackstar IQ, our proprietary search tracking database, identified 1,001 requests for information on the stock from institutional investors in recent days. Those searches were made by just over 600 individual professional traders, a level of activity that has taken Tesla to the 3rd most searched ticker in Trackstar's listed stocks database. That's all we have time for today, but as usual, make sure you do your due diligence before making any investment decisions. To find out more about our Trackstar IQ data, sign up to our free newsletter at investingchannel.com/Trackstar.